Welcome to episode 35, John Templeton, 10 Lessons. This is an outline of episode 35. There are 3 reasons why we study John Templeton. First, he's one of the greatest investors in the 20th century. Second, he's a pioneer in global investing, crisis investing, and contrarian investing. Third, he lives a very long and stress-free life. Sir John Templeton is a small-town big billionaire. He never likes the big city. He spent the last 30 years of his life in Nassau, Bahamas.
John Marks Templeton was born November 29, 1912, in the small town of Winchester, Tennessee. From his mother, he learned the value of education and to explore new ideas with a perpetual sense of optimism. His father was a lawyer and entrepreneur who taught young John his earliest lessons in finding opportunities where others could see none. John was an exceptional student who graduated first in his high school class and was the first in his town to attend college.
John Templeton was admitted and began his study at Yale University. Then disaster struck.
When I was second year at Yale, my father told me that he couldn't give me even $1 to go back to college. I thought that was a tragedy, but it turned out to be one of the greatest blessings anybody ever gave me, because it made me an adult. It made me stand on my own 2 feet. It meant I learned to work hard, because working hard was the way to produce a better result.
He graduated near the top of his class at Yale University and went on to become a Rhodes Scholar at Oxford University.
Earning a master's degree in law, John Templeton set out to tour the world. He visited 40 countries and returned home in 1937, determined to build an investment business with a global perspective. John started working on Wall Street in 1937.
In March 1939, Hitler invaded Czechoslovakia and World War II began. John Templeton borrowed $10,000 and bought 104 bankrupt companies in the New York Stock Exchange at under $1 each. 4 years later, Templeton would sell his portfolio for a 300% gain. In 1954, he created the Templeton Growth Fund, which would become one of the best performing mutual funds of all time.
When we started the mutual fund, I didn't fly from New York to Toronto. I took an overnight Pullman, and we held a shareholders meeting, and only one shareholder arrived.
Each of us should try to make our life beneficial. We don't know why God put us here. It may have been that we are supposed to make the best use of our life to serve humanity in general.
Lesson number 1, be an eternal optimist.
Have you changed that attitude a little?
No, Louis, the outlook is so wonderful that none of us really understand. All the world is progressing more and more rapidly. Half of all that's been discovered in science in the last 50 years, half of all discovered in medicines in the last 20 years. There are 10 times as many shareholders now as there were 40 years ago. Pension funds, individual retirement accounts, and all growing so rapidly, and the quantity of shares available to buy is shrinking, so that in the long run, share prices are likely to be much higher than they've ever seen before. The great bull market did end 2 months ago on August 25th. We are already now well into a bear market, but it's possible the bear market has already ended. But if it hasn't ended yet, the chances are it will end by the end of next year. So all of us should start focusing on when can we get in order to share in the next bull market.
Lesson number 2, be a global investor.
John, the world that is your financial oyster has changed dramatically in the past year. What is the significance to investors of those changes in Eastern Europe?
It's just wonderful, Louis. Surely 1989 will go down in history as one of the great turning points. It was not only the time when these captive nations became free, a great boon to the poor people of those nations. Also, it will bring prosperity to the surrounding nations and prosperity to the world. But much beyond that, it will bring a feeling of brotherhood, a feeling of release from the tremendous danger of communism and the danger of nuclear war. This will have a profound effect and should be very optimistic for share prices. We don't decide ever which nation to put our money in. We decide where is their stock selling at the lowest possible price in relation to the estimate of its value.
Lesson number 3, crisis investing. Invest at the point of maximum pessimism. Lesson number 4, be a contrarian.
John was the ultimate contrarian.
Every crisis, John Templeton was in the midst of it.
I was there in 1987.
People were panicked beyond comprehension. John, what do we do? And he said, let's go find stocks to buy.
Lesson number 5, how to find bargain.
When we began to buy there 25 years ago, our average cost for the best Japanese company was only 3 times earnings. But even today, with the collapse that's occurred in the last 3 months, they're still selling for around 44 times earnings.
You're suggesting it'll be good for all share prices. Is it something that provides specific opportunities in Eastern Europe before we get back to our own market?
Yes. Of course, you can't invest in those nations directly. You can only invest in the corporations nearby who will work with those nations, such as the German companies. But already the German market in terms of U.S. dollars is up over 50% in the last year. So it's probably too late to rush in and buy the German stocks today. The chances are that the profits won't show up for some years, so you will have plenty of time to get in.
It's typical of you to focus on valuation. For several years, people have been chiding you for having gotten out of Japan too soon. Maybe they're not saying it quite so loudly this year with the Japanese market off. Is the Japanese market still overpriced in your judgment?
Yes, Louis. We estimate that the market would have to go 50% lower than it is now before we begin to find bargains in Japan.
Where are you finding bargains today?
Where people are selling. You never get a bargain except when most investors are trying to sell.
Lesson number 6, be patient. Invest for the long haul.
What's your advice to people in terms of the stock market now?
Patience, be a long-term investor, be prepared financially and psychologically to live through a series of bull markets and bear markets, because in the long run, common stocks will pay off enormously. The next bull market will carry prices far higher than this one.
Why?
Because the whole nation is growing more rapidly. Gross national product of the nation will double in at least the next 10 years. We think the gross national product of the nation 40 years from now will be 64 times as high as it is now. And that will be reflected in sales volume and profits and share prices. So that from a long-term investment standpoint, it's a question of when should you put your money into stocks. We can't give you the exact day, but sometime the bull market will start again and you want to be in on it.
Lesson number 7, recession is happy hunting ground.
There will be opportunities, but in our opinion, it's too soon. We have not had a recession now for over 7 years, and eventually there will be a recession. When you do have a recession, then that's a happy hunting ground for those companies that went through bankruptcy or companies that are highly leveraged. It's an excellent thing, but let's wait a year or two.
Lesson number 8, the 4 most dangerous words in investing are, this time is different. Lesson number 9, it pays to be a great student. Lesson number 10, be humble. If we become increasingly humble about how little we know, we may be more eager to search. What have I learned today? For 7 decades, John Templeton was a pioneer in global investing, in crisis investing, and in contrarian investing. Thank you for watching. Please leave your comments and questions below. Wishing everyone peace and prosperity.